Thank you very much for having us here today. My name is Alex Boggis and I'm here with my colleague Lukas Ahnert, and we both represent Xtrackers in the UK. Xtrackers is a German headquartered ETF manager for passive investments, and we have clients from around the world and a growing client base here in the UK. We offer a range of equities, bonds, commodities, but other interesting investments as well, such as more nascent ones, such as Bitcoin, Ethereum, also carbon credits. So really you can come to us for anything that you're interested in. However, today we're here to talk about the US market. So why should you talk about or think about the US market? Well, the US market is part of the largest economy of the world and therefore has the most options and opportunities for you to invest in. We in Xtrackers offer you the choice of what and how you do that, from the MSCI USA index, which offers you the full coverage of the market, through to large caps in the S&P 500, down to small caps in the Russell 2000, and even more interesting opportunities around, say, technology in the NASDAQ. However, if you're worried about valuations in the market, we can also offer you different types of factor exposure, including the value option. And alongside that, if you think the US market is to continue from where it is now and going forward in a more growth-orientated way, we offer that as well alongside momentum opportunities. We also offer quite interesting products that allow you to distinguish between what is good value now and what might be good value later. And one of those funds is our S&P 500 Equal Weight.
So the S&P 500 Equal Weight is based on the same 500 stocks that are in the S&P 500 index, but there's one key difference, and that's the weighting of those stocks. As the name suggests, the index uses an equal weighted approach. So all of those 500 names, they're featured with 0.2% of weight in the index, and there's a frequent rebalancing on a quarterly basis that just resets those weights back to the 0.2%. And investors are using this tool at the moment quite actively to adjust their portfolios, because an equal weighted solution is quite versatile and an all-in-one solution. So one big issue that investors are facing these days is a lack of diversification in US equity markets. And we've seen it recently in the headlines, with a lot of the focus actually being just on those very large cap names, but not so much the rest of the index. And broadening that diversification is much easier with an equal weighted exposure. So every single stock is featured in an equal fashion. The equal weighted approach also helps to dial down some of the sector tilts that US indices typically feature. One example is the tech space. So tech is quite heavily represented in an MSCI USA and of course in the NASDAQ index, but an equal weighted exposure is also more balanced on the sector side. At the same time, there are also further changes that take place on the factor level. So typically an equal weighted approach is more focused on the smaller cap names and more on those that are having attractive valuations at the moment. So all of these are tilts that investors can introduce in the portfolio, and an equal weighted approach just does that all in one step. Hence it's appealing at the moment. And also it's important to point out that the long-term track record of these approaches is actually quite outstanding. So S&P has index track record since the 1990s for this index, and actually it resembles the S&P 500 in terms of total return still quite closely, showing again that for investors there's always a good opportunity to look beyond the few very large cap names in the index, but to broaden the exposure and diversify across indices. Index-based building blocks have become a great tool for investors to build and adjust portfolios. And there are different lenses that investors can take. And Alex already mentioned a few of those. So some investors might be focusing on regional allocations. Others might look into sectors, factors, or even thematic approaches are growing. And at Xtrackers, we've got over 200 of these building blocks on the shelf, and a lot of them are on the AJBL platform. And what we see at the moment is that actually a lot of investors are preferring a kind of like almost back to basics approach, where they focus on the regional lens of investing. Because one of the big challenges that investors are seeing in their portfolio is that, well, typical large and mid-cap global equities portfolios, they are 70% allocated in the US and only 30% allocated in the rest of the world. And that, of course, leaves many regions, the UK, Europe, but also emerging markets overall, quite underrepresented in the portfolio, especially if you look into other alternative weighting approaches that might be out there. So then there's a need for tools for investors to adjust those weights. And regional building blocks can really be a great starting point to do so, to reallocate, say, from the US to Europe, or, for example, just to double down again on the US and increase the allocation there even more. And once this identification of a good US weight has been decided by investors, the next natural step is, of course, this idea to think about what index is it in the US that I want to be invested in. So first deciding on the US allocation and then almost selecting the correct US index. And as we've discussed, there are a plethora of options there, and they all work very differently. And especially when we look into potential events for the autumn, we've got the US election coming up. These are periods of heightened volatility. We believe that especially in that area, there will be some good opportunities for investors to use different indices to make the most out of the market environment.